And we is live. What's up, everybody? Welcome to On the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it. Markets are a little bit down today. I'm looking at the overall indexes, and I see the S&P 500 is down about 0.5%, which is good for 25 points down. We got the Dow that's down around 137 points. No big deal there. It's about 0.4% down on the day. Then we have the NASDAQ that's down 1.2%. Another bad day for the NASDAQ. We'll continue to keep an eye on that. Crude oil's up slightly here as well, about 1.5%. We also have Bitcoin that is down, falling off of its $24,000 resistance, now sitting down 600 points or 2.5%. What is going on, everybody? We got some good things to chat about today. We got Cisco's earnings in particular to react to. We also want to talk about, I don't care what you want to talk about. I'm just kidding. Kind of. But Bed Bath & Beyond also going nuts again today, after being featured on our Shit or Legit segment of the show, which, by the way, make sure you're doing that, putting it in the chat, SOL, and your favorite ticker to show up at the end of today's stream. Let me hit up everybody who came into the starting five. We got Fernando Pereira. I can never get that right. Pereira? Lindsay Heiss. What's up, Bodie Beard, John Gosson, Kevin Hawthorne. You guys are starting five. If you did not make the starting five, it could be, ladies and gents, that you are not subscribed and hit that notification bell. Each and every Monday through Friday or through Thursday, I go live at 3:45 p.m. Eastern time to cover the day's events. It could be anything going on in the market, but in particular, I specialize in earnings. I do all the earnings coverage here on this channel, and I think I do a pretty damn good job at it. You can ask the people in the chat how they feel about their earnings coverage, but I do a pretty good job of it. And so if you're interested, if you're looking to get Cisco's earnings reaction today, then today is your day. If you want to see more of that, though, make sure you hit that subscribe button, hit the notification bell. And as you're walking through the door, I certainly would appreciate a thumbs up just to show some more support. Are those Starship tiles in the background? Asked Bodie Beard. No, they're actually some sound deadening material. I'm working on my makeshift studio here, guys. It's a work in progress, so we're getting there. These are the really fancy Elgato sound deadening panels, which I'm super pumped about. I gotta fix this too. I don't know why. Can you see that? I just have this outlet just sitting there. It's just my little buddy. I got my little buddy. We can just wave to him. I don't know how to get rid of that either. I gotta find a way to hide that. But hey, listen, it's not my first rodeo trying to make a studio in a bedroom as we await the Medify studio to continue to get built and recover from the fire and all that. But we are adapting, folks, and we are continuing to just push forward, which, hey, that's what we do here. So we got Cisco on the docket. So right now, Cisco is going to be reporting earnings after hours here. We have it sitting at down around 0.25%. It actually had a pretty decent rally. We can take a look at the chart here, and I can show you that today it actually had a halfway decent move, and then it just kind of died and fell back down. So we're seeing a pretty decent sell-off going into the close. The expectations for Cisco this afternoon are going to be, oh, shoot, I had it pulled up, and now I don't because I am an idiot. Here we go. 82 cents a share, $12.78 billion in revenue is the expectation there. Last time around, they beat by 1 whole cent and they missed by $500,000. So pretty decent miss. Now that revenue number was actually higher than what the expectations are for this quarter. So to me, I think the bar is set pretty low. But we'll see. A couple of analysts out there rating this as an outperform, $60 share price target, which is pretty significant upside. It's around 25-30% or so. And there's also calls for concern here. There's calls for concern that Cisco could walk away from the guidance that it provided at its 2021 Analyst Day of roughly 6% revenue and earnings growth. This is on an annualized basis through 2025. Obviously, a lot of things have slowed down, and Cisco isn't going to be immune to that. There is some revenue growth on the assumption that we could see could complement Cisco's selective pricing and shipment on products. So we'll see. We'll see what happens with Cisco. It's looking like it's going to end flat on the day, but those are your expectations. We could potentially see somewhere around 80 to 85 cents in profit. Earnings per share, $12.54 billion in revenue seems to be what some people are expecting. So, as I'd mentioned, the actual consensus here for earnings is somewhere around 12.78. So that would be a jump if that's the whisper on the street. And we'll see. Cisco is like one of those old dinosaurs as far as tech is concerned. This is one of the survivors of the dot-com bubble, and they're still here. Bed Bath and Bed and Body Works. I can always get these. I always get these mixed up. Bed Bath and Beyond and Bath and Body Works, two very different companies. But yes, they do have earnings today as well. We can cover that, Alvin, if you would like us to. Wasn't quite sure how many people would actually be interested in Bath and Body Works, but we can certainly chat about it. Let me pull that up actually. At BBWI symbol there. We'll pull it up. I didn't put that in the title because I wasn't quite sure how many people actually cared about this one, but I'd be happy to cover it. 41 cents per share is the expectation. $1.61 billion in revenue. Man, Bath and Body Works is still that big of a company. It's not big, right? $1.61 billion in revenue for the quarter is not big by any stretch of the imagination. I just didn't realize they were still bringing in that kind of money. Last time around, they actually pretty good. They beat by 12 cents. The estimate was, or the actual was 64 cents, and they beat that by 12. Revenue came in at $1.45 billion, which beat the consensus there by around 7.14 million. So, listen, if demand's still strong with Bath and Body Works, I'm sure it could look pretty darn good for people who might be interested in taking a look at it. I mean, the retail numbers have been a bit mixed so far. Maybe Bath and Body Works comes on the higher side there. Let's take a look at the daily chart real quick. It looks like it's had a pretty decent bounce. I mean, that's a pretty solid bottom there at 25. You can see that it came down at around 25.73 and then retested that area about 2 weeks later and has had a hell of a bounce ever since, breaking over that 50-day moving average and approaching that 200-day. We got about 25%, 23% to go before we get to that 200-day moving average. But hey, strong enough earnings could yield a move, such a move. Let's check in on, speaking of BBWI, let's check on Bath and Body Works. Or Bed Bath and Beyond, sorry. I told you I get it mixed up. All right, so this is absolutely ridiculous. I don't even know what to say. Bed Bath & Beyond was up 30% yesterday, up another 17%, and it was actually higher than that. It was up another 30% at one point today, too. We take a look at the 5-minute chart. You can see the highs that we saw yesterday were around $28, and it hit $30 today. Again, like I'd mentioned, it was up 30% yesterday is where it closed. It's looking like it's going to close somewhere around 15% today. Is there still enough juice to squeeze out of this one? Now, according to Seeking Alpha, Bed Bath & Beyond has a short interest of around 40%. That's a lot. To be exact, it's around 41.86%, so 42%. There is potentially some more juice to squeeze out of this one. I just don't know if I could, in good conscience, be like, hey, yeah, this is definitely a solid one. Can you make money off of Bed Bath & Beyond right now? Yeah, if it continues to squeeze up. But that's a big if. I think that the risk here is certainly great. You can look at RSI, and it's sitting at 90. It's in the 90 percentile right now. Bottom that we saw was at $4.38, which was back in the beginning of July. So in 6 weeks, this has gone up 600%. I just can't constitute and feel good about getting into something that's up 600%. Can it pull an AMC? Sure, maybe. The last time we saw this at a crazy high was at $53.90, and it got dragged all the way down to $4.38. I think there's certainly a possibility that something like that could happen again. And I ask you guys, especially for those of you who have traded AMC, GameStop, some of the other meme stocks that we saw out of there, Clover, right? And we were part of Clover too. We had some high hopes for that one. But have you not learned your lesson? For those that are the AMC apes, I know some of them out there are still firm believers in AMC and that it's going to 100K. More power to you. I equate those 100K AMC folks to flat earthers. You're out of your goddamn mind. I don't know where Bed Bath & Beyond is going. All I know is that it's gone up 600% in 6 weeks, and I just can't see myself being like, oh, yeah, this is a great one to get into. No problem. I don't know. Is it just me, or is it a coincidence as well that Doge and Shiba have gone off at the same time as Bed Bath & Beyond has? Just food for thought, people. Let me know in the comments what you guys think about this. Has anybody played it? Has anybody made money? I would love to hear somebody that made money, even if it was on Bed Bath & Beyond. Is Bed Bath & Beyond more money than AMC? Asks Bodie Beard. In what context? Are we talking about market cap or what? Because I think it's around the same share price as AMC is right now. I'm not quite entirely sure on that one, but yeah, someone said SHIB to the moon. Yeah, SHIB is where's that at? That SHIB has moved up pretty considerably. It's down 2.8% right now, but it is up a ton. It was trading at 747. I can't even count all those zeros. And then it went all the way up to we dropped a zero to 18. We'll call it 18, and it's looking like it actually has a pretty decent bull flag. I'm not gonna lie. On the daily chart, Shiba could be breaking out. We'll see. Doge also making a hell of a move. So yeah. Anyways, wanted to touch on a couple other things now that we got some of the meme stocks out of the way. We had some earnings this morning that I was right and wrong about. Target came in and actually didn't do well on earnings today. We have the stock trading at 2.87% in the red, and they came in and missed. So actual earnings per share, excuse me, we're at 39 cents. They missed by 33 cents. Yikes. So they came in at 39 cents per share, missing by 33 cents. Revenue came in at 26.04 billion, missing by 30 million. So a slight miss on revenue, not as bad of a miss. And the stock is now down 2.83% as I speak. Comparable sales grew 2.6% on top of the 8.9% growth last year, reflecting comparable store sales growth of 1.3% and comparable to digital sales growth of 9%. While the company is planning cautiously for the remainder of the year, current trends support the company's prior guidance for full year revenue growth on the low to mid range, mid single digit range, and operating margin rate at around 6% the back half of the year. This to me is a little bit okay, big deal. You know what I mean? Like Walmart knocked it out of the park. Because they had a pretty low bar that they'd set, and it's actually going to close green yet again today. Target just couldn't do it. They just couldn't do it. So now we're going to have to wait to see if Target can come in and pull it off towards the end of the year. Walmart had really great things to say about their back to school sales, where it seems as if Target just couldn't, hit the target. So I actually missed the boat on that one a little bit, missed the mark on that one. I thought Target was going to come in and have a similar story that Walmart did. Unfortunately, they did not, and that's why the stock's now down 2.5%. So missed that one. Another one that I missed that I was really disappointed in was Peanut. Krispy Kreme down 12% after not having a great earnings either. They missed on a lot. They came in, missed by 2 cents. So the expectation there was around 10 cents per share. They came in an actual of 8. Revenue came in at 375.25 million. They missed by 10 million on that one. That is a 7.5% year-over-year growth, though, for a company that's been around forever. I guess that's not so bad, but nevertheless, it wasn't what the investors were expecting or hoping for. Net revenue came in at 1.49 billion to 1.52 for the guidance. Consensus was 1.56, so below on guidance there, and that's really why this stock is trading down today, in my opinion. Organic revenue growth of 10 to 12%, adjusted EBITDA of around 189 to 195. These are all guidance numbers, by the way. Adjusted net income to Krispy Kreme shareholders diluted of 49 to 54, 29 cents to 32 cents versus consensus of 41. So these are all far lower than what expectations were for guidance. And that's why you're seeing the stock down. I don't know, though. We'll see. They didn't miss by a ton on expectations. As I'd mentioned, they missed by 2 cents. 8 cents was the expectation, or it was the actual, the expectation was 10. And then 7.5% year over year growth for DNUT. I missed the mark. I was wrong on this one. I thought this one was going to really do well. And unfortunately, it did not. Sometimes you miss them. Or sometimes you do well, sometimes you don't. This is one of those times where I just didn't. I thought for sure we'd have a decent quarter out of DNUT, especially with some of the growth that we had seen from Dutch Bros and Starbucks. Unfortunately, sometimes you just don't get them all. So there you have it. For those, that's Starbucks, or I'm sorry, that's Krispy Kreme and Target. And then lastly, we had Lowe's. And then we'll get into some of the earnings reaction. Lowe's actually did pretty well too, pretty much in line with what Home Depot did. Nothing too much to write home about there. They ended up beating earnings expectations as well. If you guys want me to talk a little bit more about Lowe's, put it in the Shit or Legit chat. Would love to talk a little bit more about it, but I don't think there's a whole lot to write home about. Let's check in on Cisco, see how we're doing. This is one of the earnings that we're going to be reacting to today. Stock seems to be just kind of moving, typical after hours movement on this one. Doesn't look like those earnings numbers are out just yet, but as soon as they are, I'll certainly let you guys in on that, let you know what's going on there. But not too much movement from Cisco just yet. And then we also have someone requested that I react to Bed Bath & Beyond. Sorry. God damn it. Bath & Body Works. I'm never going to get that right. I hope you guys know that. I'm just going to continue to fuck that up. Bath & Body Works reports earnings today, not Bed Bath & Beyond. And we'll be reacting to that one as well. Estimated earnings per share for Bed Bath & Beyond are at around $1.55, $1.5 billion in revenue. Let's see here. Actually, let me just double check. Nope. $1.61 billion, 41 cents per share is the expectation there for Bath & Body Works. Bath & Body Works, not to be confused with Bed Bath & Beyond. The retail numbers come in okay when they were reported today. Yes, they actually came in line. They didn't really do much else. The retail numbers came in line with expectations. So that's why you didn't really see the market do a whole lot today. And yeah, it closed down in the red, but it wasn't really that much to write home about. It's kind of a boring day, I would say, in the market overall. Watching Shiba on the weekend, says Bodie Beard. Just checking in on some of the things that you guys are chatting about. Way off target, says, yeah. I definitely was off target on Krispy Kreme, that's for sure. Yep. I hear you, Philip. So right now, Bath & Body Works, not a whole lot of movement there just yet. Check back in with Cisco. That stock started to turn a little green right now, but nothing just yet. Already see the Shit or Legit coming in. Getty and Zim. I'll be happy to react to those later on in the show once we get to these reactions on Cisco and Bath & Body Works. Let me see if we have any of those numbers coming in just yet. I'm going to pull up Cisco right now. No real numbers on Cisco yet. And let me just double check in on Bath & Body Works. Nothing on that one just yet either. So still much of a waiting game. William Williams, what's up, my man? Says that Bed Bath & Beyond has already dropped. Yeah, what's it doing after hours right now? Yeah, it's already tanking another 5% after hours. Good on anybody who shorted this. I mean, you all making some money now. I would be very nervous to be short on it, though, too, just given the amount of short interest. All right. Cisco's now moving. Oh, look at this. Froggy. Appreciate the donate, man. Donating $10 for the cause. Thank you so much. It says, thanks for covering Sava yesterday. Timing was perfect as I sold off a little nice profit. bro, Froggy, Sava, the way that we covered that and it just started popping right out the gate. And just as we were talking about it, we couldn't have scripted that any better. We really couldn't have. But Cisco is absolutely popping off. I appreciate the donate, man. Thanks for the support. And it is now up 4%, 4.5% after hours. Those numbers are now coming in. Cisco ended the fiscal 2022 year with Q4 revenue at $13.1 billion, flat year over year as far as growth is concerned, and over the fiscal year up 3% year over year. That met expectations. Strong demand with record full year product orders and backlog. Progress on business model transformation with total annualized recurring revenue around $22.9 billion in the fourth quarter. Revenue for the Q4 came in at $13.1 billion. If you guys recall, $12.78 billion was the expectation there. So a solid beat on revenue. Earnings per share GAAP at 68 cents, non-GAAP at 83. As I'd mentioned, GAAP estimate was at 68. 82 was the normalized estimate. So that is also a beat there. Pretty decent quarter it's looking like for Cisco. And you can see the stock is actually reflecting that, now up over 4.5%. Revenue, as I mentioned, for the full year fiscal year came in at 51.6 billion, increase of 3% year over year. Again, that's coming in with expectations. Q1 fiscal year guidance. For those of you who don't know about fiscal years, we're now in the first quarter for Cisco. So their fiscal year is June to June. So we're now in the first quarter for them. So this is their guidance for the current quarter that we're in. Revenue was 2 to 4% growth year over year. Earnings per share guidance is 64 to 68. Non-GAAP is 82 to 84. So I believe that's above what expectations were for the year of 2023 fiscal year guidance. 4 to 6% year over year growth. I believe it was that's in line. I'll double check that, but I believe that's in line with what expectations were. So a really solid quarter for Cisco. And obviously, as I'd mentioned, we're seeing a pretty decent reflection in that. So far, none of these numbers are worth selling the stock for, that's for sure. And you can see that the stock's actually getting bought up here now, up around 4.5%. So pretty decent reaction for Cisco. Holy shit. Jeff Chow said, I played Bed Bath & Beyond. I made about 657% so far in options. You know why, Jeff? Because you know how to sell. Good on you, man. Hell yeah. That's unbelievable, bro. Unbelievable. 650%. That's amazing. All right. So we got 147 of you guys hanging in the stream so far. We got 36 likes. And while I appreciate you watching, can we hit that thumbs up just to show me some love if you're enjoying the stream so far? I certainly would appreciate it. So far, we covered Cisco. We covered some of the morning's earnings, such as Krispy Kreme, Target, and Lowe's. And we're reacting to the stocks that are coming out right now. Let's take a look at Bath and Body Works. See where that stock is moving. You can see that stock's now down 3 1/3%. So it looks like those earnings are indeed out. If I can pull those numbers up, I will. And looking like I can see if I can find something, but I don't see a whole lot right now. Those Cisco numbers were pretty stellar. We'll come back and check back in on those to see how they're doing in just a little bit. As we all know, sometimes, earnings come out and there's this immediate reaction, and then somebody sees something in the report itself, and then you see a pretty significant sell-off. So hopefully that doesn't happen. But, earnings are so crazy sometimes. You just never know. All right. Let's see. I can see some really good questions here, and I'm going to answer a couple of them as we're waiting. Sean said, asks, how do you think Nvidia will do next week? We got a couple of really good earnings next week as well. We got Costco, Nvidia also reporting. So there's some really good ones. I think Nvidia is going to be an interesting one. We heard from AMD at the beginning of earnings season, and it wasn't exactly a great quarter for them. And we all know that Intel absolutely shit the bed. So I have to say that I'm not all that optimistic about Nvidia and the semiconductors as a whole right now in the short term. Nvidia, solid stock that you should just hold forever, in my opinion, right? I don't know if this is something that I would just go all in on in the short term, and I certainly wouldn't play this earnings as I don't know, your own casino. But hey, some people do, some people don't. That's just my 2 cents. I think going into these earnings for Nvidia could be very rough. A couple of reasons. One of those obviously being the supply chain issues still being an issue, and then the exchange rate, which has hit a lot of these stocks. The strong dollar has really impacted them quite significantly. So just be careful with that. Checking back in on Cisco, giving back some of those gains a little bit. It was up 4.5%, now only up around 3.5% on a pretty solid earnings report. We'll see where this goes from here. You can start to see the selling is now taking a place here a little bit stronger. We'll see what happens there. Checking back in with Bath and Body Works. BBWI is that ticker symbol there. Ooh. There we go. Now down 3 1/3%. Still down somewhat. It's not down a ton, but I still don't see these numbers. Let me see if I can find them somewhere else. I'm not seeing them on Twitter. Let's see if I can find them here in. Nope, they're not in Seeking Alpha yet either. So there seems to be quite a reaction here, but I don't see anything as far as earnings numbers are concerned just yet on Bath and Body Works. As soon as they come in, though, I'll be happy to share them with you, but I don't see too much of any numbers, even though there seems to be some action here on the screen. So it looks like those numbers just aren't out yet. Snookeroo says it's hard to bet on Nvidia with current conditions. Absolutely agree there. Plus, the valuation is pretty high. Here's a good tell. How are the GPU prices for the mining projects? They've actually come down a lot. So for those of you who don't know, I'm involved in a really, really massive Bitcoin mining project. And GPU prices and miners themselves have gotten awfully cheap, relatively speaking. Miners are still expensive, but they've gotten a lot cheaper in the last 18 months. Nvidia chips the same. Tony B chimes in, says this rally almost spent. I think Apple is almost spent. I think Apple probably push it up more, got overhead magnet, and then I'd get out and or go short for September. They usually low. I think there's actually at the very least a rally going into November. I think we see a rally going into the election, and then we'll see what happens. But you might be right, Tony. We'll see. Okay, Bath and Body Works getting back to even here. I'm going to give us a good old refresh to see if those numbers are in. Yeah, got nothing there. Just to recap on Cisco, let's come back and check that stock out and see how it's moving. It's given back almost all of its gains. So it was up around 5% at one point here after hours on a strong earnings beat, and guidance seemed to be pretty much in line with what expectations were. And here you have the stock is now just kind of sitting barely above where it closed at, up around 2 1/3% after being up around 5% right out the gate. It was a pretty decent quarter, I thought. Annual recurring revenue for Cisco is up 8%. It's a big deceleration from the 11 to 12% over the past 4 quarters or the past year. I don't know if it's a huge one. Someone was chiming in on that, by the way. I don't know if that's a huge deceleration. I think it's in line with pretty much with what everybody else, especially in the tech sector, has been doing. It's a slowing of growth for sure, but not really that. I wouldn't say that I'd be sounding the alarm over a slowing of something like that, especially from Cisco. You know, it's not Apple. We're not expecting 50% growth every year from something like Cisco, right? So I don't know. You see the stock is now trying to start to sell off a little bit more, now only up around 1.5% after being up 5% right out the gate. And this is what I was talking about earlier. Sometimes you see stocks have an initial reaction and then reality sets in on whatever's going on. Somebody sees something in the report and they start selling it off. I didn't really see any reason, in my opinion, to sell off Cisco after that report. I thought it was pretty solid coming from them. But I don't know. We'll see. It looks like Bath and Body Works is in. Stock's now up 4%. Pretty decent move now after it was down 3.5% after hours. Now making a pretty solid move here. Expectations for Bath and Body Works was 41 cents per share, $1.61 billion in revenue. It looks like revenue numbers came in 1.61 billion, so in line. I'm sorry, that was net sales. Let me see total revenue here. Earnings per share, it looks like I'm seeing coming in at 52 cents. What did I say? 41 was the expectation? Yes. 41 was the expectation. And that's according to Seeking Alpha, depending on where you get your expectations from. 52 cents for the second quarter ended July 30th, 2022, compared to the 77 cents for the quarter ended in July 31. Second quarter operations income was 241 million compared to the 384 last year. So pretty significant slowing of growth there. And you can see that the stock is actually reacting to that, now down 3.5%. It was an interesting move to the upside off of that. I wasn't quite understanding why, but now we're seeing that the sell-off here is making some sense. It's making a little sense here. 2022 outlook for the rest of the year for Bath and Body Works. The company is forecasting the third quarter earnings from continuing operations per diluted share between 10 and 20 cents. Fiscal 2022, the company is forecasting earnings from continuing operations per diluted share between $2.70 and $3. So that's your numbers for Bath and Body Works, ladies and gents, in case anybody was curious about that one. Again, they came in at 52 cents. Consensus was at 41. And they came in line with revenue. Some are saying that it's a slight miss on revenue. You can see the stocks continue to sell off. It's now down 6%. Hope nobody went long on Bath and Body Works. Alvin says, I hope it tanks. Well, you got your wish. It's tanking right now. Is anyone else's level 2 messed up? I haven't really looked at my level 2, to be honest with you. Honestly, I hate level 2. It can be manipulated so hard. I hate level 2. I think level 2 is a useless indicator. Some people swear by it, and that's fine. Because obviously you can see unusual activity in there, and unusual whales. That's his bread and butter, right? But it can be manipulated in so many ways. Just as a penny stock trader back in the day, that's where I cut my teeth on penny stocks. You had so many people out there, whales, that could just manipulate the bid and the ask so much so that you have no idea what's actually going on. I mean, you really don't. So who cares if level 2 screwed up or not? Just my 2 cents. Melanie Hutchinson says, did Target suck at earnings? It looks like perhaps maybe, Melanie, you came in a little bit later. I'll forgive you for that. But yes, they did suck at earnings. They missed on earnings just slightly and didn't have all that great of guidance. Certainly contrast to what we saw from Walmart yesterday. So Target did end up having kind of a poo-poo earnings. Level 2 is useful in options contracts. And that's this again. I don't disagree with you, Jeff. I just feel like especially when people just base all of their trading decisions off of level 2, it like I said, it can be easily manipulated. If you have a shit ton of money and you can move money around, and you know that people are paying attention to level 2, whether it's options or stocks, you could easily tank a stock if you know what you're doing. Easily tank a stock, just as much as you can easily squeeze one up from that manipulation. And look at this from Bath and Body Works, by the way. It's moving all over the place. Investors don't know what they want to do with this right now. So they came in and beat on earnings per share, came in line or maybe even a slight miss on revenue. Some are saying that they actually beat on revenue, 1.6 based off of your estimation. So I'm just going to go ahead and go in line on revenue. Earnings per share, 52 cents. The expectation was 41. So a solid beat on earnings per share. The guidance seems to be getting everybody all up in a tizzy. We're seeing this went down as much as 6%, then went green in the same 5-minute candle. Now back to red, down 3.33%. So some pretty wild action here from Bath and Body Works. Guidance numbers seem to be kind of what is getting everybody kind of all jacked up. So we'll see. We'll see where this goes. 130 roles eliminated in leadership positions at Bath and Body Works. Holy shit. That's crazy. That is crazy. The one D Lee asking about shit or legit. Let's go ahead and get into it. So shit or legit, I saw a couple of them in the beginning of the show. We'll get to some of those. Shit or legit on The Honest Company. Be honest, the one D Lee. Are you bringing this because fucking Jeremy brought it? Did you sip on the financial education Kool-Aid and that's why you're bringing it here? It's okay. Listen, man. Admission is the first step to a better path. I'm just fucking with you. But here, so Honest Company, it's shit. Look, the company, they have so much debt and it's up to their eyeballs. I just don't know if and the sales certainly aren't there. It bottomed and has almost gone up 100% from the bottom. That we saw at 254 back in June. June 16th was the bottom we saw in Honest. So if you bought it down here back in June, you're doing quite well. I mean, you're doing really well. But God help anybody that bought it before June, because you're losing your ass, especially if you've been holding on to this thing. You are what we would call a bag holder. Now, listen, we've all been there. I've been a bag holder many times myself. Still bag holding on some stuff. But this one, I mean, look, there's one direction this thing's been going in, and it's been down. Until it actually goes in a different direction, it's shit. And the Honest Company, maybe they start making some moves. I just don't see the growth there that actually supports actually buying this, in my opinion. Long term, maybe it's a good long term hold, but I just can't get my head wrapped around this one as to why there's so much excitement around Honest. I really can't. So for those reasons, it's shit. Colin Williams asks about SOL on Ecom. And I appreciate this. There's a lot of context to this one. It says stock that U.S. Senator Tommy Tuberville has been quietly loading up for the past 6 months and basically crushing it Nancy Pelosi style. I love this. If you guys have been following along with social media, we've been talking about this a little bit, on how senators and, lawmakers absolutely crush the S&P year in and year out. This is what Colin is actually referring to. I love it, man. So Ecom, in my opinion, is obviously a pretty low priced stock. It's trading at 19 times earnings. It actually does kind of look legit, to be honest with you. I mean, hey, listen, so that senators buy it means that it's got to be bullish, right? Oh my God. So Channel Advisor Corporation, that's who this is. Yeah. Channel Advisor Corporation, together with subsidiaries, provides software as a service, or SaaS, solutions in the United States and internationally. The company's SaaS is a cloud platform. So this looks like it's somewhere along the lines of the same industry. And correct me if I am wrong on any of this, for any of you guys who are looking at this, and Colin in particular. This is kind of like living in the same industry as Snowflake, or even Microsoft with their Azure platform, or Amazon's AWS, the cloud computing space. Fastly, I'm sure, is probably what would be closely comparable to something like an Ecom. They're profitable, which is great. They're a little bit overpriced, but not too much, especially considering some of the PE levels that we see in some of the other ones. So it is, I guess, on the lower end in this industry when it comes to forward PE. Listen, it looks legit to me. Not going to lie. Maybe old Senator Tuberville is on to something. I think it's legit. I do. I think it's legit. Take a look at a couple other ones. SOL on Lemonade. And This was one that the Wall Street Bets crowd kind of bastardized. I thought this was actually a great company, and it just got ruined. It got pushed up to $188 a share, came all the way down to $16 in May of this year, and has not been doing all that great up until recently. Recently, we've been seeing this move pretty damn good. I like the company. I really do. And it looks as if we're starting to see a potential shift here. It went up over the 200-day moving average, closed below it today. So be careful with this. We could start to see this come back down and retest these levels, maybe around $23, $24 a share. But I do think that this is still on the lower side of things. I like this long term. Lemonade, in my opinion, is legit. And it looks as if we're starting to see this move in the right direction. Some might be scratching your head and be like, well, didn't you just say Honest was having with a similar chart? Yes, but Lemonade actually has a lot more things going for it, even though it's one of those companies that is still trading and operating for a loss. The growth here is where I like it at, and it's pretty extraordinary. So Lemonade, in my opinion, is legit, even though it might require a lot more patience. Gold is absolutely shit. Here's the thing about GLD. This is the ETF for gold. Just to give you a reference, I'm going to go back 10 years on gold. If you bought gold in 2012, we'll go to exactly 10 years ago. Okay. August of 2012. GLD was sitting at $162 a share. 10 years ago, it was sitting there. It closed the day at $164.35. If you held it for 10 years, it had gone up $2 a share. If you account for inflation, forget about it. You've lost money. Gold, in my opinion, is absolute dog shit. Period. I know there's some people crazy about precious metals, and I just don't get it. That is a monthly chart, by the way. I hope I'm wrong for those of you who are long on gold. I just don't see the allure. I really don't. Getty, thank you, Stropino, for the reminder. I saw that you posted it earlier. This is Getty Images, correct? Didn't they have earnings earlier? It looks like they had earnings earlier this week. Stocks trading at a market. This doesn't even have a market cap listed on Webull. Well, let me see if I can pull it up on Seeking Alpha. Getty Images. Have you guys seen Getty Images? I believe. What's the business? What's the angle here for Getty Images? I think it's like you get to copyright images, essentially, right? Isn't that the whole purpose of Getty? Operates as a visual content creator and marketplace in the United States, internationally maintains privately owned. That's exactly what it is. Okay, so that's their game. That's their angle. They're trading at, this is according to Seeking Alpha, 73, 74 times forward PE. Yikes. And that's at $1.16. Something's off here. This looks like they're diluting to some degree. I'm going to go with it shit. I like the concept, copywriting images, but it's an uphill battle in my opinion. SOL and Zim. What did they do? I actually missed their earnings today. Ticker is GETTY. Okay. I was making sure I had it. So shit or legit on Getty. I think it's going to be shit for now. I think it's just going to be shit for now on Getty Images. There's no moat. There's nothing really that I think that actually sets them apart from anybody else. Why would I invest in Getty Images? Yeah, they have, they copyright on images. Okay, cool. I just don't see that as a ridiculously sustainable business model. So here's Zim, down 6%. I'm going to go out on a whim here and think and assume that they didn't do well on earnings. I had a lot of people that had high hopes for Zim coming into this morning. It looks as though they came in and actually shit the bed, however. Let's take a look at those earnings before I give my thoughts on this. So this morning they came in and at an earnings per share of $11.07. They missed by $1.58. That's a pretty big miss. Revenue of $3.43 billion, missing by $270 million. So a miss on top and bottom line. And the stock closed down 6%. Company reaffirmed its previously provided guidance for the full year 2022 and expected to generate adjusted EBITDA of between 7.8 and 8.2 billion and adjusted EBITDA of 6.3 to adjusted EBIT of 6.3 and 6.7 billion. So coming in line, reaffirming their guidance, and that's probably why the stock came down. They missed. It was a bad miss. I think the company could do well longer term at this point, and we talked about this a little bit, that I thought that shipping was actually going to do pretty well. And this chart in particular doesn't look great. You know, the stock didn't do well. They missed on earnings. It's shit for right now. Hate to say it, but it is shit for right now, unfortunately. Forced breathing is tyranny. Jessica Alba's company is the honest company. Yes. Mr. Casey still talking about honest. Didn't they lie about being organic? I don't know. I don't know any of that. I just look at the chart and I look at the company itself, and I think that I'm going to go with that. That's a hard no. Zim's PE is 1. Yes, it is. Yeah, we talked about that a little bit yesterday. And all right, guys, that's going to do it for me today. A little bit of a light stream today because all we really had was Cisco to react to. There's a couple other ones tomorrow morning that I can certainly put into your ear. Let's go ahead and I just want to confirm this as well to make sure that we are there. Okay. Gonna pull open my phone, and I'll just cover these real quick to make sure that I got them right. So tomorrow we're going to be reacting to. So we got Kohl's tomorrow, BJ's that is also going to be reporting before the open. I'm not all that confident in Kohl's, but I got a lot of confidence in BJ's. I think that BJ's will do really well. We'll be reacting to those tomorrow afternoon. Oh yeah, here we go. We got Applied Materials. That should be a good one. Billy.com. It's Bill.com. Sorry. And then we have Ross tomorrow afternoon as well. And Estee Lauder, I think, is tomorrow as well. So those are going to be the ones that we're going to be reacting to tomorrow afternoon. Hopefully I'll see you guys at 3:45 p.m. Eastern time. And enjoy the rest of your day. Tomorrow morning, forgot to mention this. Go check out DCTV. And you know what? I'm going to put the link in the description. Don't leave just yet. Guys, make sure you're tuning in. I have another morning show on a different channel that we have recently launched. And I'm super pumped for it. We're going to continue to build this thing. I got a bunch of my friends that are in crypto that are teaching me about crypto, and I get to teach them a little bit more about traditional finance as well. So I'm going to put the link in the chat. Here we go. Go follow us there. If you're in our Discord as well, you'll start getting notifications as to when we go live, but it'll be 9 to 10 p.m. Eastern time that will be live. So just before the market opens and just after it opens, so we can get that reaction to the market open and talk everything crypto and traditional finance in there. All kinds of good stuff, guys. Would highly encourage you to go check that out. But that's going to do it for me. Thanks so much for tuning in. I'll see you all tomorrow. Bye.